Okay, hi there, guys. Hi, Gino. Who else we got in today? I hope we had a good weekend. A good weekend. Wait till a few more get up and running, and then we'll get started. If you can hear me, okay, which I'm assuming you all can, just give me a g'day, Ben. Just give me a holler, thumbs up, or whatever you can manage to do. Oh, fantastic! You can hear me. I'm assuming. All right. Okay, let's just rip into it. So, good Monday. I hope you're doing well. Welcome to Trade Setup, the live stream. It's the 24th of May. So market's kind of boring today, to be quite honest. Was just watching the Hang Seng and the Nikkei, and I was just trying not to trade it because I know that get yourself in the proverbial before the stream, it sets me off on the wrong tangent. So I was looking to go short, and it just fell apart, which probably would not, may or may not have, but yeah, some good price action happening lately. That's the only action I'm finding at the moment. The ASX seems to be, really lacking any conviction. So anyone that hasn't joined us before, welcome. Feel free to follow us on Twitter. You'll see in the top left-hand corner of the screen there, Facebook, and subscribe to us at YouTube, the bottom right-hand corner. I think it's at TradeSetup, capital AU. You find us on there. G'day, Nathan. And just remember, if you do like what you hear, it'd be great if you can leave us a like and help us promote the page, or promote the channel as well, and get a bit of traction. So today, just before I forget, it's only general advice what I'm talking about here. So what I'm going to talk about at the start is about planning for trades, set up for trades. I know we've all got different trading styles, which is fine. It's all great. Um, but it's good to see the different trading styles and where you're looking at. But I think the most important thing, whatever your trading style, is to plan ahead what you expect to see, where you expect to see your setups, where you expect to see the action. Most importantly, where you expect to be right or wrong. Okay, proven right or wrong, and what key levels. So it's a bit of a fine art. I don't think it's particularly, and I've seen a few different way people trade, and I think sometimes for consistency, a lot of people are lacking the conviction, not so much the conviction, but the confirmation on the setup, and I think that's in the way of a particular setup that they like. Not just buying into a level because you just buy into a level or sell into a level when a market rallies into a level and you just got to sell out of there. I think that's can be you're not waiting for confirmation, you're just sort of expecting that your setups can be fine. So we'll go over that a bit. I'll go over basically how I do it and what I like to see and how I've learned. I've learned from, I think Nathan would know, Davin. Um, I think he's fantastic with the way he trades and the way he explains things too. I don't know if Nathan can back it up, but I think in the past, what he explains to me and why makes a hell of a lot of sense. And most of my trading, pretty much anything, is based around sentiment, or it's based around momentum, but it's the sentiment of the market, where you expect and what you are seeing and how you translate that to market sentiment between buyers and sellers. I guess the fight between the bulls and the bears, and who's sort of winning out, and what that means to momentum. Is it a momentum shift, continuation momentum, all that sort of stuff. So it makes a lot of sense when I'm thinking about it in a psychology manner. Um, Case in point at the moment is cryptocurrencies. If you go and read on Twitter, they are all become trend followers, turn into bag holders at the moment, I reckon. And a lot of them are still talking up the same narrative. I mean, of it going to, you just got to be able to hold it. If you can't weather the storm, that's crypto, da da da. If you've been around the markets long enough, you've seen the same sort of thing with individual stocks, for example. It's the next big thing in lithium or the next big trade, da da, it's great. That's going, you just got to hold it and you'll get paid off. Everyone talks it, especially when it's going in your favor. But everything, and I say that with probably conviction, I guess, everything has a limit to the amount of buyers that will go in and the amount of, you know, traders that will enter into the market. It's not infinite. So, and I think with Bitcoin and the crypto space at the moment, they've been weathering pullbacks. Every pullback's been bought up. I think it's changed now. Looking at it, and you'll see a lot of people, as the tide keeps turning, as it keeps going out, there's more and more people will be caught with their pants down, especially with margin. People forget that when margin kicks in and everyone's getting wiped out, I mean, they might be right down the track. I don't think so. What that's doing is if the market hasn't got supply to keep pushing it higher, and like I said before, I think everything will run out of fuel all the time, and it needs to reset. It may have a pullback, a major pullback, minor pullback, dips, spikes, whatever you want. But I think we're into a bit of at least a major pullback at the moment in crypto. If and this is going to flush a lot of the rubbish out there as well. There's been a lot of absolute garbage in the crypto space that's been bought up. People are doing well, have done well, and it's just turned around. They won't exist come, I reckon a month or so. But what I'm saying is that a lot of this flush, people have seen buying the dip, and people you can see they talk it up on Twitter. I bought it here, then I bought down here, then I bought down here. You just got to hold it. That's fine. This will all come back and we'll be riding high again. That's fine. I don't think so though, because like I said, if it's right and the market's finite with the amount of fuel that it can go, a lot of people are getting washed out now. And if people are getting washed out, margin called, cleaned up, that's really taken away from the fuel that can want to go back into the market. So there's going to be a lot of repairing to do if we do see highs. I mean, we may have just seen the high, whatever it's 60 something thousand on the Bitcoin, for example. I mean, people are talking up 100, 200, whatever. Of course, if I was long, what am I going to say? I'm never going to say I'm long from 40,000 saying this is going to go down to 30,000. I am the dumbest trader in the world if I say that. I will always be talking my books, and the only stuff you'll see on Twitter is people talking it up. And the flip side, no one's going to say I'm long from 60,000 and it's down at now 40,000, for example. No one's going to say, oh, I'm long from 60,000, just hold, because you look like an idiot. Okay, I don't want to say that. It's going to come across bad, but that's the way the markets work, I think. And a lot of times people get caught out thinking, you get on it, you've seen this we've waited for so much confirmation, the market's just hot, hot, hot. But generally when things are really hot and everyone's talking about it, you're kind of at the end of a run and it needs to correct majorly. So that's the way I think of my trading in terms of psychology. It is fuel for a move. Are we late into it? Yeah, I think crypto space, if you're buying above 60 on Bitcoin, it's obvious now, but buying above 60 on Bitcoin, when you start to make these minor new highs and deeper pullbacks and things like that, you're running out of steam. There's people taking some risk off the table. And no matter what people say, how strong you've got to hold, I guarantee you there's people on Twitter saying you've got to hold for longer term. They'll be booking gains because it comes to a time when you see your gains evaporate, that you will be concerned about losing it all. Everyone's got a threshold. And I guarantee there's some people who just go, nah, a really conviction that hold it forever and it won't ever come back again. I mean, look at the people holding through the GFC at the highs. Nah, you just got to hold it. Just on the ASX, for example, we only just 10 years later, we only just got back up there. I don't know where the individual shares, but if you're trading the stock, you just got to hold it. Stock market always goes up. It's a big correction, but when it comes straight back, no problem. Don't worry about it. 10 years later, yeah, it's come back. I don't think people are going to be holding positions for 10 years. So all I'm saying is that there's the reality of trading and there's the talk of trading and the hype of trading. And I think of everything in form of psychology. Where does that leave me with price action? And I think this is a good little analogy. The new trader. There's always these, I guess, painful experiences in the market, and they'll happen more often than not. The experienced trader, rides the highs and lows, but eventually they get caught as well. So it's just a matter of trying to minimize that risk in the market, knowing that you're going to cop a whack every now and then. Doesn't matter how experienced you are, you're going to cop a whack, but it's trying to minimize that and realize that, there's a time when you do get whacked, then you took that. For example, I took a long setup that's exactly the same. Each time I just take the same sort of setup as I can. Not every time it's going to work out, and you've got to realize that. But probability-wise, it's a high probability setup, so I've got to take it because I don't know if this one's going to be the one that kicks on really hard, or I may cop a hit on it. But I know over time, if I take it every single time, maybe 65% of the time, that works out quite well at a 2-to-1 ratio, for example, if you've done your stats on your trading style. So that's what I'm saying about experience. You're going to cop a whack every now and then as well, but it's a matter of minimizing that whack with a good risk management strategy and trying to take those setups when they're there. When you're a new trader, you think everything's a winner. and you dive in head first, balls and all, I guess. And you really, when you cop a whack, you cop it hard because you're not experienced enough to know that risk is the most important thing in trading. I don't think there's any way around it. So let's get on to just looking at, so there's a few things I'll go over. So when I look at my trading for planning and execution of a trade, so what I'm trying to do is prep a trade, and I want to first and foremost is plan off key levels. Where am I going to see some action? Where is the market in relation to this level? Am I in the no man's land? Okay, for me, intraday no man's land means don't trade it. You want to be working off key levels because you can get whipped in the chop between, if it's sort of in no man's land, for example, it's up in the air who's winning, bulls or bears. If it's trending high from one level to another, yeah, you could take a continuation trade, but that's pretty much it. But you've got your minor levels you have to work off still. So it's always working off a level. Okay, and where are those levels? Where are we seeing those major levels, minor levels, and things like that? So I think first and foremost is go through your charts. If you're a technical trader, I guess most of you are, is marking up where those key levels are, where you expect, and some action or reaction. Generally a reaction off that level from either sellers or buyers. The buyers keep pushing it through, or the sellers come in hard and heavy and knock it back down again. Okay, but you know that there's going to be something at that level, and you're going to get a peak in interest between buyers and sellers, or of buyers and sellers. So if we just take a quick look, this is the ASX up here. I'll just draw through the levels that I'm seeing. So we know that that was the high. I generally, if you can see, is that coming up okay? Yep. Let me just minimize that. I want to get more of that chart. Okay, so you can see in here, we made this little minor high low, and then we made it into new all-time highs just before the major sell-off back in March last year. We got some max. I generally take the level before because I consider that just a flush. Okay, a flush in the highs. I don't technically take it, but you can take, you can take sort of both levels if you want because we're coming up to there now. All right, so that's my first, and it's clear, it's an obvious level. Okay, we've got a level from before. We haven't taken out this high from February, from early February. Was it early Feb? Oh, about mid-February actually, wasn't it? 20th of Feb, when the ASX pushed into new all-time highs. So we know that that's going to be on the cards potentially. Okay. And where do we see it? Okay, the market's traded into that zone. We've just backed off, and we had a little bit of a pullback lately. So if we just not worry so much about that level anymore, we've got that marked up. So I know that, you've got this trend up here. So we're just trying to mark up that trend. We know that's clearly, we're in an uptrend there. We touched on, I sort of taken it from this level because I think that's when it settled down. That was the initial reaction up, and that's when you sort of got more of a buying, soaking up and starting to lift, and we come back to level, lifted again off that level. So I consider that more of a key sort of support zone. Now we've got this other level, I'd say, well, we've probably got it about here. Maybe you can take it from there. Let me just check where I was looking at before. Now I think there's more of, this level through here. We've touched on that. We've held again. So that's just a minor level. So we know that, okay, we could potentially break this trend, take out these lows, but the longer term uptrend is not broken. Okay, so we've got sort of some key levels. We're putting together that picture. All right, so that's sort of the first part, what we wanted to do. We know that where will buyers potentially, where did they step in before? Okay, and we got the most recent high low was down around 66, 65, say. Okay, buyers supported it, lifted price up, and we got a good expansionary phase up. What we're seeing here is a bit of contraction. So you've even got a level you can see through here. Okay, so for me, at this stage, that's my picture for the ASX. We'll just keep it nice and simple. All right. Nice and simple. So I've got my first part, I've marked up my levels. Okay, and I rinse and repeat this for all markets. You'll pick out your key levels where it's on, when I'm trading intraday on the Hang Seng or the Nikkei, individual stocks, because what this does is enable you to see what the market's doing around key levels, what are buyers and sellers, how are they reacting to those levels, and you know that that's a level because it's reacted off there. It fell off that level. Okay, we pushed through, we reacted, we retested it. We just retested it again a couple of days ago. What was that, Thursday? Wednesday pushed into it, reacted back off Thursday. So we know that's a key level, or it's at least a level that buyers and sellers are reacting. All right. And what we're trying to do from there is just minimize that picture. Are we looking for a trade off that level? Okay, yeah, we can. And then what am I going to be looking for after that? We could, let's just say there's a minor level in here as well. I think these are the levels. If we break through there, I would want to see what happens on the first pullback. The first pullback may hold the MA. So what you're sort of looking at is, okay, if we get through that level, I don't really want to buy on the break because it could, if you buy on that break there, for instance, can everyone see that okay? Is that not quite clear enough? So we're just focusing in on the far, the right-hand side of the chart. It's the hard right edge, we call it. This is the most recent price action. But we've got our levels and we know we're into this key highs, major highs. As long as high lows keep holding, the trend is up. So we're sort of squeezing into that point of agreement where sellers could pile in or buyers could keep pushing it through and it doesn't really become a level at all. Does that make sense? So, but you've got to have it in the back of your head that there could be some sellers coming into that zone. So what I'll be doing from there is I've got my price action all set up, and I'm now planning what I expect to see and how I expect to react to that. So that's the most important thing. So if we've got the market presses through this high, it's at 70.82. Is that going to be big or small? Okay, that's just in here. If we press through that level, and I want to buy on the break, so I want to buy a breakout, for instance, of that. My stop has to be all the way down here. It has to be at 69.10. So for me, that's what's that 170, 80 point stop. I don't want to. I'm not going to trade that, especially if I'm trading the index. And I don't particularly think that that's the greatest of things to trade, greatest of styles to trade. I'm not just going to take that as a breakout because you know that markets flush. They flush all the time. They'll take out a high and then pull back. We just did it, if we remember, right back here when we pushed it in new highs and then we failed straight away. So that will catch breakout traders. We know that use a wide stop that might be trading off a daily chart. I always like to use my time frames. Okay, if I'm not comfortable trading off, this buy entry on a break of 70.82, I'm going to drop it right down. I might try it off a 30-minute chart, for instance, and I might drop it right down where I can at least what happens on a 30-minute pullback, because this could just keep going on. We don't know if it's going to just bang straight through. We don't know if it's going to pause. We don't know if we're going to get a pullback. We don't need any of that data at the moment until it plays out on the daily at least. Okay, so you're asking a lot. If you're going to buy that breakout at 70.82, you've got to have your stop below this most recent low, because that's where you're definitely proven wrong. If we start to trade, go through that level and we trade straight back down there and you get stopped out, you're on the wrong side of the market. If you get anywhere near that, you're probably on the wrong side of the market. And we could be looking for a much deeper correction down to this secondary zone, meaning that we could just pull straight back down to that zone. And that's a possibility. So to negate that, I would go down to my lower time frames. So I'm a big fan of using different time frames to try to build my picture and refine my entry. And not just refine your entry, but refine my risk. And I think this is where I think a lot of traders I see that are developing need to work on essentially their entry criteria. Okay. So the second part, once I've got my levels, I'm trying to work out what momentum is. Okay. We know that momentum is quite clearly on the ASX. It's quite clearly up. I've got my 20 and my 50 EMA. That's the trend at the moment. We're contracting off the highs. Okay. It might be minor contraction. We don't know. It could be major contraction. Nothing's confirmed just yet. Okay. So picture at the moment is telling me just to stand and wait for more confirmation in something. I know momentum, which I use on the MACD, it's sort of gone from that overbought. We're coming back to the zero line. I don't mind that at all. My RSI, which I tend to use as well, I tend to use it buying, it can go down to the 40 zone, but buying, I want to see it at least above 40, potentially bouncing around that 50 zone and pressing higher, and above 60 is quite a good solid trend up. Okay, if you're trend trading. When it becomes more of a range bound market, I tend to find a lot of markets will stay between 60 and 40 on the RSI. And I'm using that as on the 10, RSI of 10, not 14, I think it's a stat, stock standard. So a rangy market will sort of hover between there. When it's solid momentum up, it's kind of above 60. But when you get these pullbacks, if it can hold 50 or at least 40 and hold above there, and you're looking for the higher low, then I know that, and it's starting to rise, and I know momentum's on the MACD is above zero. These sorts of things add up for me, and I know I'm trading on the right side of the market. Okay, rather than trying to sell short when you're going against momentum, which is up. Okay, so there's no reason at the moment to be short this index, the ASX. you can short it off the highs, but you're risking being completely wrong. Okay, so to short that, I want to see that if I'm going to short it from my daily chart, so we just stick to the same chart, for me, the MAs have to be down. Okay, it's quite simple. Have to be start to flatten out or going down, and we've got a shoulder to trade off. So I want to see those a good sharp move below the MAs, and then if that first sort of grind back up pulls back to the MAs, then there's a good chance we want to be short. Okay, but at the moment it's long because it's bouncing, still bouncing off those MAs and finding some levels, flushing some traders out, and still finding, holding those key levels, holding the trend up. Okay, so once we've established which way momentum's going and which way we want to be biased, whether we want to be biased up or down, in this case we're trying to be biased up. We want to be biased up. It's about confirmation. Okay, and like I said before, you can go down to a lower time frame. You've got your levels to work from, but it's about confirmation in the form of a high low on this chart. So I might be going down off the daily. If we start to do something like this, we might just again hold a higher low. We might hold off this inside level. You can see just prior around 69.60. We might back off. We might hold the MAs again, and we might do this kind of thing. We might start to do that. If we do that, then there's more confirmation that we're going to have a good trade higher, and you could essentially go off an inside level, off a lower level, and try to front run a break into new all-time highs. Okay, so that's what we're trying to do. We're not trying to guess buy off this level. You don't want to buy when it comes straight into a level, because if you put a resting bid in there, you're really anticipating that you're right. And I think over time, that's going to be a losing scenario, or maybe best break even. And it really forces you. Can have a lot more losses if you trade that way. But if you can trade off a higher low, if it's off the same time frame, or at least drop it down a time frame. If you see this market just goes, if I just do this, let me just delete that just 1 second. If we just do that on the lower time frame, it might look completely different. You might look like it's coming to a level, or just pretty much what we said before, and it starts to do this kind of thing. You get this kind of confirmation of a squeeze, and you start to get these higher lows holding. Okay, that's what might be on the lower time frame, but on this daily, it looks like that. So we've got confirmation off the lower, and it really minimizes your risk. So if you're making sure that you're going off higher lows, and this might be my trading time frame, as in this is my trading time frame, but my execution might be off a lower time frame. Say for example, on the intraday, I might use a 30-minute chart, a 5-minute for my levels, but a 1 minute for my confirmation. So I think you get on the right side of your 5-minute chart with some 1 minute confirmation with higher lows, lower highs, depending on whether I'm buying or selling. But I'm definitely waiting for that confirmation of my lower time frame chart. It's going to help me a lot with my risk, and it's going to help me minimize the losses. Like I said, if you just bought here and this market went straight, well, you just take that, it goes straight through, and you've got a resting here, you get stopped straight out. Okay, so what it's going to do by waiting for confirmation, say you don't get any confirmation off the lower time frame, you get a lower high coming in, then you've just stopped yourself from getting into a losing trade. So your statistics over the longer term is going to be a lot better. Okay, so the three sort of aspects I'm looking for in my trading of anything is levels, where I want to work off, key levels to work off, momentum, which way is the momentum to try to get biased, what's the momentum into a key level, is it momentum between a bid zone and an offer zone, meaning that you're halfway in between two key levels and you're trending up, then okay, my bias is going to be up, go with the trend from one level to another. Okay, but most importantly is you need your confirmation. Don't let your ego stand in the way you're trading. Make sure you get your confirmation where you can have at least something that's going to put the probability of success in your favor. Okay, and you're trading with momentum. So this kind of thing is with momentum on the 30-minute chart, anticipating we're just going to turn around and start to go straight back up on the daily chart, for instance, if we're trading that way. But that way we've got the confirmation. We start to get this turn on the daily, and like I said, it just starts to go back up. You might go through a level, we might pause there and then go straight up. But either way, you're waiting for that confirmation off your live time frame in this zone. Okay, so that's pretty much how I'll be trading each one. I probably got caught up too much on the XJO, but we'll just go over some key levels, I guess, for the Nasdaq and a few other markets. Whoops. This is what we've been looking at for a while, and people are saying the Nasdaq's going to roll, under pressure. At the moment, it's still up, and you don't want to get caught on this talk about going short the Nasdaq. It could just, do something like this, chop around, and and then just go straight back up through the highs. Okay, because at the moment we've got this level holding. Okay, and we've just come in there, and we've, for me, if you start to look at this price action, what was it the same? Sort of the same as this price action on a bigger time frame, or even I was looking at this. That's right. This kind of action here, I was looking at from a second leg, was pretty much the same. We've come into support, then we held up a high low, and we took off into new highs. So you've got an inside level to work off here, and this is kind of the zone. If you start to see it hold, this is the zone you want to work off in anticipation we're going to break through the highs. Now it did get through the highs, didn't get too far, but we know that with our zones, with our price action, with our levels, we know where to work an entry, okay? And we know why we're trying to work off this entry, all right? So to me, we're sort of doing the same thing here. Potentially, if we hold this zone and we've just broken through, if you can see that kind of a W pattern, what do I want to do here? W meaning down, up, down, and we've just broken to the upside. Now, all that talk about inflation and we're going to kill it, for me, the market's not saying that just yet. We're still holding. We're holding this higher low here in comparison to, say, this zone in here, this high low off the trend line. We're holding. We're still holding. Price action is sort of suggesting to me that that downtrend into that is starting to break. So what would I be looking for now is pretty simple. If we can get a high low build, maybe something like that, then I think you want to be long NASDAQ, because we're starting to work back up again, and we're going from selling pressure to buying pressure. It doesn't matter what the news said. The news will talk anything up just to get the readers. If they're talking up inflationary concerns, we're selling off because of inflation. It's just a natural progression of the market, the chopping around the market. So they'll say, okay, we're selling because of inflation this day. Oh, we got bought up because inflation fears are gone. Oh, hang on a sec. Next day, inflation fears are back. They don't know. Okay, the market's going to move the way the market wants to move, and we're just going to look at the price action. So all in all, what I'm saying here is with the NASDAQ, if we start to hold this inside level, that would be my plan of attack. We start to hold a higher low here, then I think it's going to start to pressure higher. And that theme that we could be looking to new highs again, okay? And then it's just, okay, where could we stop? We might be going in this sort of grind up. Longer term, we might not get through those highs very much, or we might pause at those highs. We don't know. But at least we know where we want to buy. We know why we want to buy. We know where our risk is. And if you're trading that index itself, you could have a 2-to-1 trade, and it doesn't really go anywhere. If that makes sense. It just goes back to the top end of this range because your risk is so small, okay? But you're managing your risk, obviously. Look at the Dow. The Dow to me, it's definitely an uptrend. Nothing's changed. Doesn't matter what they're saying. We've got this low that, key support zone here. It's come into that level, bounced, made a lower high. So everyone that's talking up fears of selling, it come into that level, rejected it. Okay, so you've got to look at that and go, hang on a sec, why aren't we selling off? Quite simple, we're not going down. Okay, and then you want to start to look at what other levels are going to get attacked and where do we want it. So for me, really it's that high, that lower high. You can see that. So I'm marking up my 2 levels. I know my momentum's up, my bias is up. We're coming, we are easing off of momentum, but with the MACD, if you're looking at that, we're coming down. But when you're holding higher lows still and you're coming back into that zero line, there's no reason why we can't just bounce off that zero momentum, lift up, and we start to spike higher, okay? But we don't want to buy it until we start to get that shift with momentum, and we want to get a higher low. So I'm reckoning if we start to do this and contract and hold some higher lows below this level that I pointed to with my finger and you can't see, I think we're just going to go banging straight up. Okay, so that's what I'll be looking at. If we start to hold this inside below this level, especially, there's going to be some bears that will be selling it, thinking we're near crash because they're not really waiting for confirmation. They're trying to preempt the break of that trend. But until we get that break, once we break that level, this is what I'll be looking for on the downside. If we go straight through this level here and we start to get this kind of a grind higher, I'll be looking for a decent sell-off. But until we break that trend up, which we haven't, my bias has got to be up, and I'm waiting for a long entry setup, okay, off the daily, and I obviously drop down for confirmation of my lower time frames. All right, does that make sense? So that the 3 steps are, looking for your levels, your key levels, bias, which way is momentum going? Is there bias in the market? Is it just range trading? If it's range trading, you're taking a different approach. You're trading off the edges. But again, whether I'm trading off the edges or as a continuation trade, I'm still looking for my higher lows lower highs. So if it's trading off the edges, by off the edges I mean, so that's your resistance zone, and we've got a major support zone here. The market can trend, can go below, above, come back, and just do whatever it wants. You might chop around here, it looks weak, and then goes through and then bang straight back up until it momentum shifts. If it looks like it's just range trading, you've got this bigger range forming, you're trading off the edges, meaning you still be waiting for those high lows and lower highs to sell into and buy into. So high low to buy, lower high to sell. And I would still be dropping it down a time frame. So if I've come straight into this resistance here, momentum's essentially flat and then out and it's doing nothing, and I think it's going to be a short, I'll be dropping it down time frames, okay, to trade off a lower high, because I want more confirmation. If I trade off my lower high and I've got enough fuel, which we've mentioned before, built up to the long side, I know they're going to get squeezed out. Okay, or I know that that's the theory. If it's going to be range, it's reacted off that level again, and we get a lower high coming into play, there's a good chance it's going to react off there again. Anyone that's bought it up into that level has to rethink and reassess, and they're going to be the ones that are going to fuel the move down, okay, as they get back out, and vice versa off the support zone. We reacted off there once. If you come into this level again, I'll be waiting for the higher low, because I think if we fail that level, fail to break, and we start to hold up off a higher low means that buyers are stepping in at higher levels. And once you get that break at that higher low and you've got confirmation, especially waiting for your confirmation off your lower time frames potentially, you know that there's a lot of fuel that on the downside, all the sellers that are built up that have to, they have to get out, and they could be the buying fuel to push it back up again. Okay, but either way, they'll start to realize they're on the wrong side of the market, and you'll start to get confirmation you're on the right side of the market when you're ranging. But it's essentially still the same sort of setups I would use, okay, with my lower time frames, my confirmation, my high lows, lower highs off the lower time frame, and momentum, okay? Because your momentum on your lower time frame is going to show a different picture. It could be momentum starting to shift up on the upside, and you've got your first pullbacks getting sold, hold up. But on your lower time frame, you've got your higher time frame, your momentum going flat into that support zone. But on your lower time frame, it's actually on the rise. Momentum's going up. So you want to be a buyer and just see what happens and manage your risk from there. Does that make sense to everyone? I think that's probably, there's one thing I wanted to go over. HSI. So this is something I trade quite a bit. I will look at quite a lot. But I've essentially got these levels that I've been marking up quite a bit. Okay. By the way, if you've got something you want to look at, just put it in there. Even if you want to go through this process, you want to see what I'm thinking on a different chart, a different, it doesn't have to be stocks. It can be FX or anything like that. We'll go through the process of shifting around different time frames to see where the major momentum is, the medium momentum, the short term momentum, and just try to build a picture for each different product. Or it could just be straight out shares, but put them into the chat and we'll rip into it. So this is essentially my picture. Or maybe we could draw that up. Actually, no, I'll just leave it here. So this is on the daily chart. Just clear out some of the rubbish. That's probably about it. So we see we've got a major level, and the market will do it time and time again. So we've got a major high up here. We flushed it through. That high was in that January 2018, and then we've got some lower highs. So this is the perfect scenario of kind of a range-bound situation. You know that the market's pressed into a level, went straight up and through, and crude is doing a bit of that as well, okay, at this stage. At times, it trades 2 to 1. Generally, I would like 2 to 1, and that's where it comes to planning out levels. Probably with the ASX, for instance, if you're the XJO, let's just go back to the XJO. Sorry, Ben, I'll answer your question before I get carried away, which I tend to do. XJO. This is my daily, for instance. So if you were buying that break there, and my risk has to be below here, I'm not going to take that because my risk reward is it's less than 1 to 1. All right. So because I see it as less than 1 to 1 because it's come into major highs. So you've got a key major resistance zone up there. So I'm not going to take that long off the daily chart, for instance, because if I can't see something that's a potential 2 to 1 or 3 to 1 or 4 to 1, whether it happens or not is a different story. But if I can't see that, why would I want to trade that? Because I think, if I'm completely right and I buy that break, I got my stop there, and it comes up and reacts off there, I might get stopped out at break even. I just don't think the probability is going to be on my um, in my favor. But if I drop that down, and remembering those levels, if I drop that down to a 30, let's just see what the 30 minute is saying. And I can get a high low here with this same key high in mind, and I can get a 2 to 1 from that time frame. That's why I would trade it, okay, in anticipation that the market's still heading higher. So that's why I would always drop my time frames, because I think, if I'm putting just say $1,000 risk on this trade, you're much better when you can tighten up your risk on the lower time frames to get a 2 to 1 trade, and it's much better risk reward. I mean, I guess you'd all know that, but if I'm trading off the daily with the same risk as $1,000, my risk is a lot bigger in point value, but my dollar value, I want it to keep it at say $1,000. It doesn't make much sense, because when you go into the highs, I might be risking 1,000 to make 700, and I find that I don't find that any a really good style of trading. But if I'm trading off my 30-minute chart and I could see these high lows hold, and I think, well, if I start to um, break up through a level, and I know where my higher low is, so I know where I'm proven wrong, and I put my risk below that level, then I can easily get 2 to 1 or 3 to 1, and it still hold these all-time highs. You know what I mean? Because I'm expecting that push up of that level. Okay, so that's I want at least, I want a 2 to 1 risk reward, and it's the same when I'm looking at the Hang Seng, which I said I trade quite a bit. If you're trading, this is a 30-minute. So if you're trading, I'll show you what I'm talking about. So off the 30-minute, for example, let's just say, where was the open? The open was about this candle here, I think. So up into this stage, if I'm trading off this 30-minute chart, all right, and I think a break of this level, I want to go short. I'm not sure where my risk at the moment. My risk is way up here. Now, where's 2 to 1? 2 to 1's in the support. Actually, not 2 to 1, but where's my next level, which could provide some buyers? It's you're less than that. Might be a 300-point risk. What is it? 416.28. So it's 200-point risk, and you probably got about a 50-point before you're coming into a support zone. Now what's that? A 1/4 to 1? I don't even know how to say that. It's the opposite. It's a 4 to 1 on the wrong side. A 1 to 4. So I'm not going to take that trade based off this chart, but I'm seeing that momentum's down. So what I'd do is, when I'm trading it off the 5-minute, for example, quite clearly, I'm trying to refine that, thinking, well, if it does go into that zone and we start to find some support, actually, let's go to the 1 where I would be trading off. Off the 5-minute, I'm seeing it opening, pressing down, taking out the high, taking out the low. About here, if I'm looking at this trade, this is where it starts to reject going to new highs, and it starts to build in anticipation that it's going to be a lower high. I might go down to the 1-minute chart for my execution. Okay, but remember, the 30 minutes down, the 5-minute showing that it's down, and I'm really just trying to base my trade off that chart there. So if we can get rid of this box, if I traded this, which I was looking at one stage, I'm potentially thinking a break of that level is my trade with, well, you can probably know about that risk above. So all of a sudden now that becomes like a go into support is at least 1 to 1, potentially 2 to 1. Okay, and you can see it turned out 2 to 1 before it actually got anywhere. So generally with the Hang Seng 2, you're expecting it to at least flush level. It comes into a level. You don't expect it to bounce perfectly off there. That's why I've got zones rather than a perfect level. A zone might be this is a high and this is a low. I've got the zone anywhere in between there. It could pull up, or it could just flush straight through. But I tend to think it's going to go down to the bottom end of that range. If I'm looking for a sell, I'm expecting to go down here before we find some sort of buyers to soak it up. Okay, so if that's the case, then I've got at least a 1 to 1, 1.5 1, potentially 2 to 1 or 3 to 1 playing out just by dropping it down those time frames. I guess that makes sense, Ben. Anyone else questions on those? So everyone knows the theory of that. With your trading, it's really about your entry criteria for me, and how you enter. And I always like to enter off what we call a shoulder, lower high for shorts and higher lows. You can potentially see this. This here, that was probably the level at that stage. Then we pushed up, pulled back. We've got another little minor level here. Once we start to break down there and we start to react off, you can even, I want to draw this up properly. You can even minimize your risk a bit more by going off. Once it breaks through, you got on the 1 minute, you got a bit of a pop. So you've sort of got this risk reward here, which I really do like as well. Green candle, it rejects, comes back down. A break of that low, you're in, risk is above, you've boxed up your trade, and that becomes, even though it's a little bit lower, roughly in the same zone, that could be a 3-to-1 trade with the same dollar value risk, okay? Because I know that if I get short here and it starts to come back and stop me out, I'm on the wrong side of the market, obviously. And then that's not going to be any different if I've traded it like we just suggested before with a slightly bigger risk, okay? So I think momentum's down on your 1. I've got that. I'm on the right side. I've got my shoulder. It's down on the 5 and it's down on the 30. So, you're going with momentum. You're going with the market. And it's just to manage to see what happens at the key levels. So you can obviously see this chop around here. You might want to just take some off or take it all off or tighten up your risk. You might have tightened up your risk just above this level. It sort of pops back up, fails again, or you might have tightened it up earlier and got stopped out. You tighten it here, push into new lows, reject it straight away, and it comes back up. You might take it off or you might leave your stop and you got stopped out. But either way, you've got a good little trade. It's a lot easier to manage risk when you're up. Like we've got in our Ethereum trade at the moment. I'm just watching that. So Ethereum, we sold it off the price action. Actually, I'll put that in. I'll show you the price action we're looking at there, if I can say it. So if you've got any shares you want to look at, whack it in. Oh, what do I want to do here? It's a 1 minute chart. No, I'm not getting anywhere. No, it's a 30-minute chart. So I'm looking at the 30-minute chart. So this was the price action I was looking at. Okay, it was around here. So if it's, get rid of some of these levels. This is what I'm looking at the moment. But anyone that's been sort of listening to me rabbit on for a while knows how I draw up these levels, and I'm always drawing it around key levels. So for instance, if I'm looking at this, I'm looking to trade short off that shoulder because I know it's tested a key level, it's failed, we've got a shoulder, we know that it's going to be we're expecting expansion lower. If that level, if you get a lower high off a resistance zone, there's a good chance it's going to hold and it's going to start to sweep out any of those longs that built up. And you know that there's enough longs off that low that could get squeezed out and it rolls over. And vice versa, if you come into that support zone, which we've tested before, we got the low, we tested it and reacted up off there. And if we start to come in there and react up off there again, there's a good chance that there's going to be some bargain hunters, there's going to be some shorts get squeezed out, but we know that that's the market. Rinse and repeat. If you think of it that way, you're thinking of the market's going to do the same thing over and over and over again. It's going to test the level. If the level holds, it wants to see it hold, then it's going to back and fill. It's going to go back up again, or it's going to come back down again. Okay, but that's what we're looking at, that same sort of scenario is holding. We know that we've got our key levels marked up and we know what we're expecting to see. All right, so Ethereum, the reasoning for that was back here. Actually, I'll get up the actual chart if I can find it. And I'll show you what we sent out for the alert service just to, and why. Crypto, where am I? Ethereum. Oh, what was it? 21st. Okay, here we go. So this is the chart on the 30-minute chart. So what I'm looking at here, I think the market's pressured down. Okay, we've got a good reaction off those lows. Whatever that low it might coincide with the previous low on the daily chart. It might coincide with anything. But what you've got a savage reaction back up again. Okay, but for me, if you can see this level here, that was the anchor to the downtrend. We pressed it down below 31.18, consolidated, and then bang, got smacked. Okay, so for me, that's the level. There's a lot of sellers that have built up in here because there's enough time, good 3 or 4 hours there, that brought in sellers, and buyers were trying to lift it. They couldn't, they got smacked, and they realized they were on the wrong side. So that's if you're intraday trading at least. But once they realize they're on the wrong side, they're either out or they're doing something stupid. They're putting it in the bottom drawer and forgetting about it. Okay, and they're going to hold this one, become bag holders, is what we like to say. But either way, you've got that big sell-off. good bounce back, but then it still it held into that level, okay? Then we've got this price action that's pressured down, but it's not with the severity of the first push down, okay? So that's great. That means when it's not the same severity, it means that buyers are starting to step up. They're wanting to step up. They're trying to hold, okay? They held a higher low and we pressured back into that level. But it was here when I was looking at it going, well, if we got through that level, it should be a key level. Really, we've just moved back into this zone, the same zone, which it reacted off once, twice, and it's reacted off a third time. But what it's doing, each time it holds that higher level into that level, it's bringing in more buyers. So when it brings in more buyers, it's bringing in more fuel for a short sell that have to squeeze the way out. So all we're really looking for, I want to see if this level can hold. You can see this high can hold up here. If that holds, and I'm seeing some nice little pressure down to that 2600, it has reacted off there, but it didn't react off like it did. So we've got the reaction down is not as savage as this reaction down, but the reactions up are not as savage either. So what the market's doing is, to me, the psychology behind it's coming to that point of agreement, okay? And we've traded through that 29.28, but reacted back down again straight away. So it's not convincing at all on the buy side, okay? And what you're doing, like I said, you're just dragging in more buyers for a potential fuel for a short sell. So what I wanted to see is if we retest 29.28 again and we start to fail, I think we're going to hold a lower high. That's a sort of the line in the sand for sellers. They're not going to let it get through 29.28, and anyone that's bought it up off these lows, they're trying to pick a bottom, is starting to realize they could be on the wrong side of a bigger move down. Okay, and we're really just thinking this is a key level, 2600. If it breaks through there, it's broken that uptrend, or it's broken that contraction back up. We're going essentially back into expansion of the trend down. Okay, so this is expansion, contraction, expansion again. We want to trade with expansion. I'm looking to sell there. I've got my risk above, and the rest is history. It actually, where was that? That was about here somewhere. Okay, so that was a level there. We retested it like we said, retested it, come back down. We traded through this low. We got short. Risk is above here. We've just been, we've taken a partial sometime when we woke up this morning. Took a partial around that 2100 zone. Booked that. The risk is now just below the entry price, as in we're just locking in a minor gain on that second bit, and we just want to see if they can open up, because that trend down is, if it holds here, that could easily roll over and take out to new lows, okay, back through 1800. So we were trying to give this second leg, or the second part of the alert, open it up a bit. I might lower my risk a little bit more, because I figure if it goes through this lower high in here, there's a good chance that we're going to get a bit more back and fill, okay? And I'd rather just we're not really into expansion anymore. We start to get that contractionary phase, and I'd rather be out in that contraction phase. So there's a good chance I might actually lower it to 2,300 at least, to lower in a couple of $100 in that second part. Because I feel that it should hold at this zone. Really should hold around 2170. Sellers should hold. They're going to, if they want to continue to put pressure on those buyers off this level, and previously anyone that's been buying in here that hasn't closed out, we start to roll, we start to hold that lower high, perfect area to potentially hold that there. Okay, what's momentum? Momentum's starting to fade to the upside. So it's got momentum upside. Last time we faded, we were at higher levels. We faded at higher levels. So momentum's starting to fade, the same sort of momentum fade, and we're at lower levels. To me, that's starting to say that buyers off the zone, off this lower zone, are starting to run out of steam. They're potentially going to have to think about locking in, which is selling. So you're running out of, the buyers are now becoming sellers. They might bring in some more sellers into the market. And we start to take out these lows at, say, 2084, 2080, and hold this level, this 2155, then I think we're going to start to head down and squeeze out any of these buys. So it's just, again, we're doing the same thing we did back here, the same mentality, the same psychology behind it, but it's just off a sort of smaller movement. But it's the same sort of thing. If you've got enough fuel to move on the downside, there's enough momentum and there's enough reason to hold. Or this anyway. All right, so that was that one there. So let's go over to, so only got about 10 minutes left, so we'll just get into this 3PL and then have a look at that. I know you probably put this one in before, didn't you? 3PL. So we're on our daily chart there. So the first thing you notice, we've gapped up. That was back in August August last year, gapped up, and then we've gone sideways since. So when you find you do gap up, a lot of people can get caught buying that gap, and then you get that back and fill just to squeeze them back out. Okay, but if the market goes sideways and ranges, and it's established quite a clear range now, after that, this leg up, it's consolidating those highs. The market consolidates the highs and the momentum fades. It's actually not a bad sign that we're going to get continuation, because the pullback, the commitment in sellers is very low and the commitment in buyers is still high, as in they're willing to hold. They're not going to sell on any of these little pushes through support. Even this little push through support here quickly retraced. This little push through this previous low was rejected, and we got another gap up. Come back into support, rejected. Come back into support, we've rejected it again. So buyers are still fairly strong. They're still willing to jump in. Stepping back to the weekly time frame, if you look at that weekly time frame, it's becoming a bit more clearer. Let me get that up on get it up on here. It's just a lot easier. I was going to go over push pay, but I won't do that. Go to the daily, so we'll go to our weekly. So the weekly, you've got this massive double bottom. So I actually don't mind this one, Joe. Actually, looks pretty good. Look at that. So you've got this massive double bottom. Okay, that's a bonus. What you've done, the market's come down. It's completely capitulated, and that was May. That was the sell-off, wasn't it? Okay, we sold off down to this level, reacted back off. There's still a bit of fear in here. Anyone that didn't get out here, it's sort of has now seen it pop up, start to find weighty. They might have got out here. So it's kind of flushing out the remainder that want to get out and are not willing to hold. Okay, but then when you come back into that zone, we start to hold. So this is, as a buyer, you get this test, and it's even flushing the low slightly, and then you get this inside level. There's a good chance that that's going to be a high low, and you could potentially, I probably wouldn't buy it. Well, you could have bought it in hindsight, bought it through the break there. You risk below, because what you've got is this double bottom, your first shoulder off the double bottom. And I love that sort of stuff too. You got to remember that was a trend down. That trend down is now broken. We had another sort of minor trend down, retested, had a major double bottom. The shoulder off that double bottom means that people are willing to buy it. They're willing to step in at a higher level and support it. Okay, so what does that mean? Anyone that's been selling through here, whether they're short or anyone that's been holding off through here, maybe watching that looking, I want to get in. Okay, you start to get that confirmation. You get a couple of good green candles, you might want to buy that. Your risk is below. I tend to like to buy the lower high. In this case, was that 99 cents or a dollar? Buy the dollar break. 20-cent risk. I mean, that sounds massive, but you just can adjust your obviously your dollar risk. That's a 30-cent risk. Where is the next level I expect to go to? I expect to go back up here. Whoops. So if we look at that, risk reward, you've got a 2-to-1 risk. We're consolidating through here. This consolidation through here, the longer that goes on without a pullback, I reckon that's going to kick on. It's kick on higher. Okay, so we bought it off that level, even if quite a wide risk of 30 cents there, you've got a 2-to-1 essentially, have we? Let's just see, where's my little tool? That level up to there, 76. So yeah, more than 2-to-1. Okay, so you've got enough fat in that to get a 2-to-1 trade, and this to be a massive range that could react up off that level. Now, if it goes through that level, fine, we manage our risk. So if we just go through that level and then pull back and hold a higher low, you're just going to manage your risk on the way up, and this could become a bigger trend. So where to from there? You might start to look, looking left, seeing where some other levels. There's another level up here at around 235. There's another potential level right up in the highs. Okay, so that's off that higher low, how we'd manage that risk. Now here, you kind of, I would like to drop it down. This is on the weekly, don't forget. I would like to see my daily, actually well, here we go. By dropping it down, no, I forgot we're on the weekly chart. By dropping it down to the daily, you can refine your risk. So what we've done, we've got the weekly charts reacted, massive double bottom, okay, popped up, come back into that zone and started to hold at a higher level. So as soon as that higher level is confirmed, which it was off the daily, you've actually got this zone in here you can manage your risk off. Okay, in here you can sort of buy that break. That's the same scenario we just spoke about on on the daily, on the weekly chart that's showing up on the daily. You know, you've got this same consolidation, you've got the weekly high low, you're anticipating that weekly high lows holding. You've got the first pop up, the first pullback holds at a higher level off the weekly high low. This is all making sense. But this inside high low, and we're buying that break there. We've got a lot smaller than 30 cents risk on that. So now we've minimized our risk, say, from that break. What's that? That's about 6.5 cents. So all of a sudden, even just up to the previous highs, where you would buy the breakout on the weekly chart, you've got probably 1.5 to 1, not 2 to 1, I don't think, but actually probably is about 2 to 1, isn't it? That's our breakout. What did I say? 6.5 cents. So you got a 2 to 1 trade there. Let alone the fact that it broke, and now we're heading up to higher levels. Even on this trade here, if you're managing your risk here, you're already at 33 cents off 6.5 cents risk. So you can see how they start to add up a lot by knowing your price action, by refining your price action, by trading off your key levels, by trading off your shoulders and your higher lows. Okay. Now, if that didn't set up there and you were happy to buy the break on the weekly, your risk is at the same. Well, your risk is a little bit lower, so it's become 30 cents now, and you've got to go for a higher level to get that 2 to 1. But if you're trading off this risk, you don't have to go for that level to get 2 to 1. And anything above sort of that, say 3, 4, 5 to 1, is a lot better payout. Okay, so you can see how you're constantly taking the same dollar risk, but your payouts are becoming bigger by refining your entries. Okay, what the superior yeah, that's, I wouldn't have even known that. Okay, but either way, that's probably reasoning why that consolidation's through there. So if you're going back to your weekly, you're looking potentially for a breakout here. You've probably got a double bottom. If you can just minimize that, you've got this retest fail, we like to say here. So you've got a tested once. That's the low. That's not a test. That's just a low. Pop up. We come back in and retest it. Okay, so that's what I would term a retest fail, an RTF. Okay, so we'll just put that in there. Might even want to make that a bit bigger. Okay, so that's what I would term a retest fail on that second. So potentially you could trade off this shoulder here on the way up, because what you're doing is getting, again, the double bottom. So it's the same scenario, double bottom, higher low, double bottom, retest fail, higher low in here, managing your risk, anticipating. So your first problem area is going to be at 144. But you know that potentially the longer term is going to break out through that, especially if it's got the good fundamentals and to support it. Okay, so let's get on to the last one, VRC. Let's have a look at that and we'll call it quits for the day. If I can remember to get it, here we go. Vault Resources. Well, straight off the bat, I probably wouldn't be buying that because I've got nowhere to put my risk. So to me, this becomes a risk reward play. If you hear me bang on about stuff before, you've heard me say the unknown and the known. This is not trading in the unknown anymore. It's the known. Well, we're quite clearly the price is going up. Okay. So if we're won't really talking, it's quite clear if you were, here we go. Look left, you've got some levels here. Key level, if you're coming into that level, you wouldn't be buying. You want to see how it reacts. It reacted up and off. We've got a high low. So you can start to see that there was zones in here to buy into potentially off, once it comes out of that zone, and again in here. That's prime for me. That's kind of a key level. If you just start putting a few fancy lines on, you can see it starting to break out. So that for me, we've come into a level without really holding a higher low. And then this is the first higher low of this trend down, okay? And then we've got another higher low, so it's showing some buying strength. So a break of that higher low is where you want to be trading long. Okay, so we're not really worried about that. That's where you wanted to trade. Now, if you're not trading it just yet, and if you want to get long, if you're desperate because you believe in the story, I want to see it could just pierce through this on a daily. Remember what we're saying? It could just, one daily candle up could be made up of lots of levels like this, okay, on a lower time frame, for instance, a 30-minute chart. So on a 30-minute chart, I would want to see it push through the level, see what happens on the first pullback. And if it doesn't pull back, I don't want a bar of it, because this is trading in the unknown, and I'm finding that I'm going to have to buy it when it's extended. And I've got to ask myself, how many more buyers on the sidelines are willing to come in at these higher prices once the markets or the share price is already extended? I don't want to trade that, because I think that's a very low probability trade. I'll walk away and trade something else, okay, in a zone like this, all right? But if we want to trade this, because like I said, it's got good fundamentals, probably this level here is going to be, 5 cents, 4.6 cents is going to cause some issues. So that's where I've marked it up. I don't want to trade it yet. I'm not going to buy it yet. I want to see how it reacts. It could react down, and I might get, instead of a push through, I get the reaction off, and then we get a lower high, and then we get the squeeze on these buyers. Okay, if it's squeezing on the buyers, we get the lower high come to play. You step aside and you wait. Okay, until we start to find some sort of potential that the market's going to start to hold up at a longer term, maybe a daily high low, and we get this kind of action. Okay. We get this kind of action, that's a higher low on the daily basis, like we've got here, and that's where we want to trade off a shorter term potential shoulder. We've got our breakout here, our risk below, okay? But that is all part of a longer term daily, and we might be trading it from the 30-minute, okay? And we're buying back into the rise. It's had a good pullback. It's flushed out enough of these buyers that have bought it up through here, say from 1 cent to 4.5 cents, or 1.5 to 4.5. Flushed out enough, put them back on the sidelines. If they're committed, they're going to have to get back in. Or others that have been waiting for it to pull back are ready to go in. Okay, but you can see how the momentum shifts between sellers and buyers. I would suggest that potentially there's going to be some selling momentum start to come in here. If it doesn't push straight through, if it pushes through, this could be all part of a bigger leg, and we might have to take a risk that the minor pullback is all we need to get long. And we're going to get a bigger extension, and then you're looking left to see where else it could go to. In that respect, you've got maybe some levels up here, maybe some levels up here. You just got to play it as you see it if you're long, and manage your risk accordingly. All right, so that's the two scenarios. I'm looking for failure off the level, reconfirm at a higher level, and start to buy into that expansionary phase again when it's going back up, buying with the move up. I don't want to buy here because I've got nowhere to place my risk. My risk, for all I know, this completely fails and it comes all the way back down here. So my risk has to be way back down here. I'm not going to buy it with my risk just in here, because if this starts to fail off that level, we're going to get this is your expansion. We're going to get a contractionary phase, meaning we're probably going to go through this zone through here at around 3 cents. Does that make sense? So if we react off this level, I'm not going to buy it. I want to see a higher low hold, and I want to see a deeper flush to kick out some buyers, put them back on the sidelines, reconfirm, rehold, reset, build a base, and work off that base. Okay, and then potentially go up and through that 4.5 cents, and then you're looking to 6.5, and there you get your 2-to-1, 3-to-1, 4-to-1 trade again back on the cards. Okay, so the problem is we're extended into a potential level. It's not confirmed yet. We don't know it's going through. We don't know it's pulling back. So there's two questions. We can't answer that. Stay on the sidelines. If you're long, you just got to manage your risk and potentially put it, you stop. If you're long from in here, potential stop can go, say, I would maybe put it around 3.2, maybe a touch tighter if you want. Okay. So I hope all that makes sense. But yeah, that's a bit of an insight of how I try to look at markets. Okay, how do you try to plan your trade? How you would plan to work off your levels. So it's not just about finding the levels and buying blindly. It's about finding the levels and having confirmation at those levels. Because at the very least, if you got that confirmation using your different timeframes like we've explained, yeah, you might not increase your win rate, because when you're right, you're going to get right anyway. But if you're wrong, you're going to cut back on your losses. If you wait for confirmation, you don't get it. If you're just buying off that level, you're guaranteed that that's going to be a losing trade. Okay, the ones that keep going down, for instance, if you're not buying off that support, if you're just putting a, how do I say? Let's say, let's just clear this up. Like I was saying, if this is our resistance zone, and just pretend this is, this could be FX, this could be index, it could be anything. If I want to sell there, I don't put a resting sell order there because I don't know if it's going to go through or not. It's rallying, okay? If I'm adamant that it's going to come off that level, I have to wait for that confirmation where I know that buyers are going to be wrong, are going to be proven wrong, and It's proven that that level, I'm not the only one that wants to sell it. Other people are going to sell it. So if I wait for that confirmation and it just goes straight up, okay, I've just kept myself out of losing trade. If I don't wait for confirmation, I just put in a sell order there. I'm guaranteed to get that losing trade. Does that make sense? Because I'm selling above the current price when it's heading into that level. Okay, so like I said, if I wait for confirmation that goes down and I'm right, I'm going to get those winners. If I wait for confirmation and it goes straight up and through, I'm going to cut back on my losses at the very least. All right. I mean, there's no reason why it can't do this. I get short, and then lo and behold, we just go bang straight up, and that's a loser. But probability says when you get a shoulder, we're going to start attacking these longs, and I'm going to get a chance to manage my risk. I'm going to get a gain. You know, if it does bang straight back up, okay, that's a loser. But there's going to be less of these than there is something that moves straight through that you're going to get. Okay, so it all adds into your stats. All right, guys, sorry to keep banging on, but yeah, thanks very much for joining me. Any questions, feel free to send us an email to support@tradesetup.com.au. If you're not on our forum and you want to know about it, just send me an email and I'll send you out a link. You can jump on and join in and help us help the banter in there. And if you do like what you hear, it'd be great if you can leave us a like at the end of the video. It'd be much appreciated. Yeah, thanks for joining me, and we'll speak to you again soon, guys. Cheers. Bye.